traders, Raghee here, and in this update we're going to discuss where we are right now within the context of this still very much intact uptrend. And so I guess the first thing is, if we're going to operate with directional bias, it's most definitely still bullish, okay? Now, I know that traders that are momentum traders, again, nothing right, it's not a matter of right or wrong, but they're typically going to be in the upper part of a candle that's moving higher. So the tolerance for a stall candle, the tolerance for a down candle is going to be far lower, right? And the panic, of course, and the tone ensues any kind of down move or a stall move. Because if you bought near the high of, say, the candle from yesterday, the 20th, and you're seeing today's move, it feels pretty bad. But then when you actually look at the candle, it's fairly laughable to call this anything more than just a stall. And this isn't just limited to the S&P. I mean, let's take a look at the Dow here. Dow again. Dow is an interesting level. Dow is a little bit more interesting because you see this previous Darvis level resistance, and we're still struggling with that level there. Let me zoom in just a bit. So the Dow has a little bit more resistance. And I use the Darvis, by the way, to automate this support and resistance. And so I know this is there. And going forward, I would assume that's going to hold until we get, ideally, a high volume confirmation breakout. Or, and this is the way I like to trade, let's come on back down again. Let's come on back down again. And the cool thing about an entry like this is if you enter here, in this area, or enter here in this area, you don't need anything but the market just to retrace its steps to previous resistance. I'm not looking for new highs to take profit. All I'm looking is for the market to close this area again, and at that point, we can realize a profit. So that's something to keep in mind in terms of pullback entries versus sort of trading out on a limb, which sometimes is fine, and breakout entries. Well, let me show you a limb trade, and it's a heavily weighted stock that affects futures traders, and that's Johnson & Johnson. So today, Johnson & Johnson could very well be breaking some hearts. It's the kind of symbol that's gone parabolic, and we could definitely say that Johnson & Johnson went parabolic initially in this area, definitely reconfirmed that in this area. There's a way, using historical volatility that I calculate, to determine precisely when a market is not just gone parabolic, right, but actually freshly parabolic. When is it a brand new parabolic market based on price movement relating back to the history of the market movement? So when you are playing parabolic markets, and I think these are more difficult trends, vanilla trends, just plain Jane vanilla non-parabolic trends, are actually pretty easy. But these kinds of buys are very difficult, especially if you're playing breakouts within a parabolic market. And I think these individual stocks that are making these kind of moves, these are definitely heartbreakers. Now, think about perspective, whether that be the pullback buy that I was explaining on the Dow, or a pullback buy like I'm explaining here in a heavily weighted component of the XLV, and of course also our indices. This can be an opportunity, right? This can be an opportunity. And this is where, for me, the lines get wonderfully blurred, okay? When we're talking about the way in which the broader indices are moving, at the ETF level, the way the sectors are moving, so index, sector, stock, right? Getting down to the stock level, which is the last, most granular level. These are where some of these opportunities are waiting, whether that be the broader indices or the individual stocks. So keep that in mind, all right? Keep that in mind. And this is very much this process of index, again, sector, stock, looking at the broader indices, for example, the YM or the ES, honing in on an individual sector like the XLV, and then honing in on the individual stock like J&J, and focusing on the outperformers, what I would consider also double green, within a double green index, within a double green sector ETF, and then within at the stock level. And so these are where the opportunities may be waiting. So don't worry about the pullbacks, okay? We'll talk a lot more about this in the coming days in the futures markets, and actually in my Sector Secrets Mastery. If you haven't checked that out and you want to take some of what I've been doing in the future side of things and say, hey, where can I apply this on the stock and ETF level like you're describing here, you can check this out at simplertrading.com/sector. All right, this is Sector Secrets Mastery. Explains a lot of this connection between the futures indices, a lot of the commodities. How would I play crude oil and say crude oil stocks? And we did that not only with a bullish crude oil play, but long Exxon, right? How do you take this connection and really start to magnify it? All right, gang, I'll see you in the next update.